Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla. Let's go over what's happening because it is just completely crashing. Honestly, maybe I wasn't bearish enough. Everyone was complaining that I was way too bearish up here. Apparently, I wasn't bearish enough because I'm not gonna lie, it's weaker than I expected it to be. But regardless, let's go over it. If you enjoyed, don't forget to hit that like button. This is not financial advice. I'm not a financial advisor. And of course, if you want to join my membership section on YouTube, $2.99 a month, pretty cheap in my opinion. But you get access to all my thoughts throughout the day as Tesla is moving, and my thoughts on all of that pretty much live throughout the trading day. Link is below if you're interested. But let's jump right into it. Tesla closing the day down to $218.09. Oh, rather, so that's the updated price after hours over here, 219.23, which is going to be just shy of 3% essentially on in the red, with the market down almost around 1%, we'll say on average. So yet another underperformance for Tesla, unfortunately. Now, let's discuss it, ladies and gentlemen. What is going on with this stock and where is the bottom? So first, on the daily, the most important thing to discuss. I don't know what this is. Let me refresh a quick fashion. The most important thing to discuss on the daily is going to be, of course, that 100-day moving average, which of course is this little yellow line right here, which, we did actually come down to this morning. We did actually bounce off of it several times and it was looking like pretty decent. Honestly, it was looking like, we could potentially get that bounce, and it was coming up to 225 again, and it was looking potentially promising. And then towards the last about hour and a half of the trading day, Tesla just continued to fall down. As you can see, these red candles, just very aggressive selling. Well, not super aggressive, but decently aggressive selling, and just a lot of weakness. And unfortunately, we also closed below the 100-day moving average, which isn't really good. Now, again, I do have that 3-day rule. Just because we close below, it doesn't mean it's all over. I have a 3-day rule. So essentially, if Tesla can't get back up above this 100-day moving average tomorrow or Monday, maybe, but ideally tomorrow, okay, maybe it's a little bit bad, but all that would mean is the fact that we're going to come down to my ultimate price target, or I guess my second price target, going to be around that 210-ish level, right? Which, as I discussed many times yesterday, it's easiest to describe on the weekly, right? The weekly is the best way to look at it here. It's just much easier, but nonetheless, right? Essentially, what we're going to be looking at 210 is many things. Three retests essentially. The first retest is going to be this overall ascending channel that we are in, coming down to retesting that pretty much right around $210. Of course, give or take a few dollars, but around that general range. By the way, the MACD is looking a little bit suspicious here. It's not great. We definitely need to bounce sooner than later because the MACD is starting to potentially flip bearish, though it almost flipped bearish right here and it obviously didn't. And we're kind of in the same situation right here. So definitely some caution, but nonetheless, the first thing is, of course, like I said, the bottom of the channel. We're essentially retesting that more or less, or I guess potentially coming down to it and seeing what happens at 210. That's not really a retest. That's more of just like we're bouncing in the channel. But the two main retests, of course, are going to be this blue line being the first one, right? Which is, of course, going to be this descending kind of channel that we were in-ish, right? That we caught ever since all-time highs. We kept getting rejected at over here, right? And then we finally broke out of it on this candle. And now, again, around 210 to 205-ish is going to be the retest of that, which is common. Of course, when you break out, you retest, very common. The second thing, of course, is going to be this situation right here, where you can see it was a support here, then it was a resistance here. And now, of course, we're coming back after breaking out, same thing over here, essentially retesting what used to be a resistance, now turned into support. So that's gonna be the most important thing I'll be looking at that 210-ish level, right? So that's number one, right? That's on the weekly. That's the easiest way to look at it, right? On the daily, again, 100-day moving average, we're closing well below it. We have, of course, the price, volume by price rather, which we are finally entering that, heavier volume. Again, it's not like a crazy heavy volume, right? It's not like the most insane volume increase, right? It's only like the same as up here. So nothing too amazing, but it's still a volume increase, which is good. Could serve as at least a bit of a bounce. And then, of course, we also have down below, pretty much starting at 210 that I just talked about, as low as 200, or I guess like 203, 204 roughly, is going to be a decent volume increase, right? All the way down here, you can see, right? That's going to be a lot more of a respectable volume increase, where I definitely think the bounce, I'd be pretty surprised if we come down straight to 210 from here, and also at least don't get some bounce, at least for the remainder of August, like the second half of August. Like that would be genuinely a little bit surprising if we just continue plummeting, break below 210, break below 200, and just keep plummeting to let's say $150, essentially straight down. It's not impossible. It would be very surprising unless somehow Elon is selling again, which would just completely throw all technical analysis out of the way, in my opinion, like it did before. But I would genuinely be surprised if that happens before at least some kind of relief bounce, like some dead cat bounce, some hope, at least in that sense. Would be surprising, right? The RSI is now pretty much entering oversold territory, so that's another thing to consider as well. That's pretty important to keep in mind. Now, let's talk about, okay, well, let's say we bounced, right? Where do we bounce to? Right? That's the main question I'm sure people are also wondering. Okay, let's pretend 210. Well, just for demonstrational purposes, let's say we go to 210. Let's say that is the place we bounce. The volume's there, the retests are there, the buyers really step in, and just makes sense. Okay, cool. Where do we go to? What happens for the rest of August? Assuming, of course, that that is the place we bounce. Let's take the Fibonacci, let's go from the swing high, and let's go to the theoretical swing low, which is pretty much roughly around the 210. The main levels, as usual, ladies and gentlemen, I'll be looking at are the 0.382 Fibonacci as high as the 618 Fibonacci. In other words, 244.5, about 255, and about 265. Those are the three levels I'll be paying attention to that I think the bounce can bring us to. Again, the 0.5 is my favorite level. I'll be looking at that one the most, right? Which is around 255, which makes a lot of sense in my opinion that we get a potential bounce there, maybe second half of August, maybe very early September before I think more pain is followed through. Now, with that being said, there is a potential that this could be the bottom. I don't think it's insanely high, but it's not low enough to just completely disregard. The way I personally would consider that this, let's say 210 for instance, is like the bottom, and then from there we just start heading up higher, right? Would be is if we can break above this 618 level, which is around that 265, maybe as high as 270, right? Somewhere around there. Assuming this is, of course, the bottom at 210, these levels will change depending on where the bottom is actually formed, right? But the 618 level, if we can break above that after the bounce at supposedly 210, that to me would be pretty damn bullish. And that would mean that this bottom was most likely the bottom because the bears would need to defend this level in order for them to continue this downtrend. Because if we break above 618, to me, that tells me that this downtrend that we've experienced since earnings, which by the way has been a pretty sizable downtrend, right? It's been essentially so far 26% move. And if we go down to about 210, it'll be almost a 30% drop since earnings, which is like pretty sizable, right? That's not little. That is quite a lot. Very decent correction after such an absolutely astronomical move, which shouldn't be surprising, but I am a little bit surprised at how fast it did happen, but that's how it works, right? So like I said, if we break above 618, that would mean that the bears didn't defend the level they very much needed to, and that this downtrend in theory should be done. That doesn't mean we just continue high skyrocketing, but what that does tell me, at least in theory, is the fact that we shouldn't make a lower low. So for instance, it can go something like this, right? Just for demonstrational purposes, right? So let's say we go from here, and let's say we come down to this overall level, and again, assuming the 210 is the bottom, and let's assume that we do break above the 618 level, and let's say we come up all the way, again, demonstrational purposes, 277. This to me means that instead of from here going all the way down and then breaking this level again and going even lower, which is still possible, it just lowers the chances. Don't forget, trading and technical analysis is all about probability, right? To me, it lowers the chances of something like this happening. Instead, I would expect something closer to the lines of maybe dropping down to maybe like 230, maybe even a little bit lower, slightly into the 220s, and not break this low once again, assuming we break above the 618 on the potential bounce that is on its way. So hopefully that makes sense. But that's the way I personally look at it, obviously, right? I could be completely wrong, obviously, right? Keep that in mind. No one's a perfect trader. No one has a crystal ball. And if you do, hey, that'll be much appreciated if I can borrow it. But that's kind of the way I'm looking at that. But overall, RSI, even though it's getting oversold, it's still not looking like it's ready to bottom. The stock is still on the daily, is not making any bottom signals just yet, unfortunately, which is disappointing. The MACD on the daily is still making lower lows, which is not great. Still looking overall bearish. The Bollinger Band, I didn't talk about the Bollinger Band. People were looking at or asking about it, or I saw in the comments. And the main reason I haven't is because I know it's oversold. I know it's touching the red line. I just never even bothered looking at it because it's absolutely touching the red line. But unfortunately, it doesn't matter in this case because it's not showing any bottom signs just yet. But once it does, obviously, as usual, it's very common for it to go back to the average, the mean, which is the white line, which is at the moment sitting around 250, which is one of the levels I just talked about on that Fibonacci, roughly, right around that general level. So keep that in mind. That's also important to kind of understand, if you will. Otherwise, there's really not that much more to talk about, ladies and gentlemen. Tesla's just not making any obvious strides. It's not making any obvious bottom signs yet. It still looks like it wants to go lower. And I think tomorrow, there's a very real possibility that we retest that 210 level, or like at least the mid to low teens, right? Very, very possible. And I'll be eyeballing it for sure. So yeah, let me know what you think down below. Ladies and gentlemen, thank you so much for watching. If you enjoyed, Don't forget to hit that like button. I think the last thing we'll take a quick look at is, of course, going to be options, right? Options is always important to understand. And now we can start seeing a little bit more. Well, actually, let's change the premium back to what we usually do. Let's bring it around to 50. In the 50s. Yeah, so you can see there's definitely a little bit less red bubbles, right? Compared to like the other day, I think it was yesterday or the day before, we looked at this option of flow essentially for Tesla. Substantially more bearish. Like there was so many, not only more red circles, which essentially means a bearish position, but they were bigger too, right? Now there's a lot less. So it seems like the bears and people that were holding puts and all that are starting to take their profits. And now we're starting to see some green trickle in. People are starting to enter calls. Some positions are starting to be formed and people are starting to think that somewhere around this level, maybe a little bit lower, you know, we're looking for the base, we're looking for the bounce. So keep that in mind. There are some bullishness starting to flow in, though it's still, in my opinion, more bearish than bullish, which is why probably 210s or at least the low teens is on its way tomorrow even. But the bulls are starting to trickle in with some bullish calls here, which is a good sign to see. But all in all, thank you all so much for watching. If you enjoyed the video, don't forget to hit that like button. It does help a lot. And of course, as usual, I'll see you in tomorrow's video. Peace.